What would actually happen if MrBeast rang the opening bell? No filing exists, nothing is announced, but the pieces are moving, and this thought experiment teaches you more about IPOs than most real ones. Every figure here is as reported. Start with what Beast Industries actually is: a holding company around the most watched creator on Earth. The flagship channels, the Beast Games productions, the Feastables chocolate brand, and since February, a fintech app. In December, the company's CEO said out loud that he wants fans to be able to own equity. Remember that line. The reported price tag, about $5 billion, set in a November funding round. Recent reports say 5.2. That's up from roughly $1.5 billion in 2022. And in January, a Tom Lee-chaired firm called Bitmine reportedly put in $200 million for a stake. Checks that size usually precede bigger plans. 4 businesses, 1 face. The media engine makes the audience. Chocolate monetizes it. The game show franchises it. And Step, a fintech app with a reported 7 million users, puts a money product directly inside the fan base. That acquisition is the tell. And here's why the structure matters. In an IPO filing, each of those becomes a reported segment. Wall Street wouldn't buy MrBeast. It would buy 4 line items, each with its own margin, its own growth rate, and its own questions. Now the reported financials, and they're fascinating. 2024, about $400 million in revenue, but no profit. The content arm reportedly lost $80 million, while the chocolate brand made $20, and for 2025, a reported projection near $900 million. Lesson 1. How would Wall Street price it? A revenue multiple asks a simple question. How many years of today's sales are you paying for upfront? $5 billion on $900 million of revenue is roughly 5.6 times sales. Palantir trades near 74 times. Media businesses get media multiples because content revenue has to be re-earned video by video. The market pays for margins and repeatability, not for views. Which is why the whole IPO story would hinge on one number turning. Reports say the company expects roughly a $300 million bottom line in 2026. From losing $80 million on content to printing profit, that arc is the pitch. And here's the tell that this is more than a fantasy. At the Dealbook Summit in December, the CEO said the dream is fans holding equity in the company. Companies do not say that out loud by accident. Lesson 2. The fan-shareholder experiment. Reddit famously reserved IPO shares for its power users in 2024. Now scale that to hundreds of millions of subscribers. Fans buy on love. Markets grade on numbers. An IPO makes both things true at the same time. Lesson 3, and this is the big one, key man risk. In any Beast Industries S1, the risk section would lead with a single name. One person is the brand, the distribution, and the product. If he rests, revenue feels it. Markets price that concentration with a discount. Lesson 4, how founders keep control. Founder-led listings typically use dual-class shares. Public investors get the economics, the founder keeps the votes. He reportedly owns a little over half today. A dual-class structure means selling stock without handing over the wheel. And look at the class he'd be joining. 2026 is already the year of giant listings. SpaceX went public in June and was retested hard, down 44% from its high by its first earnings. Anthropic reportedly targets October at nearly $1 trillion. Beast Industries would be something neither of them is. The first creator IPO at scale. The mechanics would be textbook. First, a filing sets the price range. The company's opening bid. Then the float. Only a small slice of shares actually trades on day one, so enormous fan demand meets scarce supply. That's how pops happen. And then the lockup. Insiders typically wait about 6 months before they can sell a single share. Day one is an audition in front of the entire internet. The real verdict comes quarter by quarter. So what would actually happen? Honestly, a fan-driven pop on day one is plausible. The retail demand would be historic. And then the scoreboard changes forever. Earnings calls replace view counts. A Beast Game's budget becomes a line item that analysts grill. Every stunt gets a return on investment column. So here's the one thing to know. An IPO turns an audience into shareholders, and shareholders into critics. The love that builds a fan base doesn't survive a missed quarter. That's not cynicism. That's the deal every founder signs at the bell. No IPO is announced. Every figure here is as reported, and plans can change. If a filing ever drops, we'll break it down right here. Not financial advice.